Hey everyone, welcome back to another market closing live stream. Let's get started. It is 12:20. We are starting a little bit behind today because we did an infrastructure video live stream just about an hour ago. So we decided to start at 12:20 today. Let's go ahead and hop on over and see what the heck is going on in the market. Let's get caught up. Let's see what's going on. Let's see what's going to the moon. Let's see what's not going back to the moon right now. We've got some pretty incredible activity though. I'm very, very excited. Many of you know that I'm really big on I've got about 25% of my portfolio in long options right now for technology related companies. I've got about 74% of my portfolio in stocks and shares related to technology. So obviously days like today are very fun, very nice and green. I generally don't add on days like today though, because I add when there's blood in the streets. If you follow me on Twitter or you watched the video I posted earlier, I broke down some of my purchases. And yeah, we'll break down some of more of those as time goes on here. But many of you already know about my favorite companies. So let's get into what's happening here. So looking at the watch list here, Trade Desk up 16.33%. I really expect this rotation to very likely hit some speed bumps. There are going to be days where some of these stocks that are up 10-15% right now, we're going to hit those 5-10% speed bumps again. It's going to happen. But more broadly, I do see tech riding a rotation back to the upside over these next 6 months. Very excited about that. We have specifically right now, Trade Desk again up 16.6%. We do have Ashford, relatively small market cap, a lot of volatility on this one. Generally, I don't see this one as a sectoral mover. It kind of just does what it wants to do. We've got Dogecoin breaking above 25.4 right now. This is breaking above or about to. Look at that. We have a resistance level at 25.83. Let's see if Dogecoin can break above this. We'll keep an eye on this. I have a strong crypto recovery. We did a solid purchase of ADA during the big dip, or ADA as many like to say, which is Cardano. Made a video about that a couple days ago. If you didn't get the notification for that, make sure you have downloaded the Meet Kevin app on your phone, Apple or Android App Store for free. You can download that. And then you can sign up for the notifications if you want them. We've got Bitcoin almost back to 35,000, which is about a $7,000 rotation in just the last couple of days here. Pretty incredible. We've got a Marathon rotating back up. This is expected. You would expect Bitcoin, Hut 8 mining, and the crypto-related companies to move up. One that's really not moving up in this crypto movement is Coinbase. It stays relatively stuck to about this 228 level here. I think there's potential to average down if you're in this one and you're looking to add some more. I like this one for averaging down. Most people buying this are averaging down. I do think that all of this extra volatility will actually help increase the opportunities we might see for growth at Coinbase as we move forward here. I did this morning finally add C3 AI. It's pretty much stable from where I bought it. Hasn't really done much. This is the day chart for C3 AI. C3 AI, as we know, has been on this incredible journey straight to the core of the earth. I've been waiting to buy this one. I finally pulled the trigger and bought a little bit of C3 AI. I guess I shouldn't say a little bit. I bought a chunk of C3 AI, and I did buy that because we are sitting at the support line. We've been sitting here for a while. The worst of the tech crash, I think, is behind us from May. I don't think we're going to revisit some of these May prices, so I feel relatively insulated right here around the 62 level. Certainly not as low again as what we had in May, but relatively insulated. And still feel like I'm getting a solid discount here. And in the partnership with Snowflake, I'm excited about finally grabbing and diving in a little bit on C3 AI. We've got a Marathon here, Playboy up 666, Hut 8 mining over 6%. Great, we expect this. Redfin recovering nicely here, back over 63. Tesla over 684, was almost 700 intraday. Did rotate down again from about 5.5% up to about this 420 up right now, which is roughly the same that we saw yesterday. So then we've got, let's see here, Fastly up 4%, Peloton up 4%. Some of these, again, a little higher earlier in the day and consolidating slightly towards the end of the day here. Wayfair up back to 320 here. Absolutely incredible. AMD, here's another one, folks. I personally am paying attention to. I'm eyeballing this one a little bit. We did also have our May plummet on AMD. May was really another opportunity to buy this big dip that we've seen since March. March and May were some of our big dips. Not sure if we'll see another dip like this. It's possible, but with this new rotation slightly pointing to an interest in going back to growth, going back to recovery, I think there are large optimistic reasons to think that there won't be another large drop like we had in March and April. Obviously, no guarantees, but I'm investing as if these lows are gone. And that we might be right now we're sitting more around these April levels. So we'll see if we end up hitting some kind of double top here or we continue to break out. That'll be something to watch for. So, and in fact, I think you could do the same thing by looking at Tesla as well. Yeah, see the 420 kind of tops over here, right? I think a big tell for this rally is going to be, can we break through the positivity that we had in April and push through that compared to where we stand now. So these are going to be important things to pay attention to as well. All right, let's see. Then we have dropping on over, Moderna moving up, EXPI moving up, Twitter, Square, Pinterest, good moves, good moves, good moves. A very good food company did go from negative to slightly positive here, though it's been on a downtrend, and so is Mind Medicine. Solar Edge, thought was down a little bit earlier today. Looks like this is the day chart here. Let's go down to the mid chart. There we go. Solar Edge consolidating here in the day, up about 0.82%. Thanks so much, Apple King, for the donation. Really appreciate it in the comments. Super nice of you. Rite Aid collapsing here about 14% after talk about falling sales being likely after the COVID vaccine. GameStop, AMC, both down about 2.3%. Sometimes I deem this to be reloading the shotgun or channeling. It's very, very common. You see this at AMC as momentum briefly takes a breather. Not uncommon. The good news is we are well within our channel here. We've got a nice channel that we've been trading within for a while on AMC. It's easiest to see that. Actually, it is easiest to see it on the day chart, which is right here. You can see we're trading between that 50 and a 60-69 level, 50-85 and 60-69. It's where I keep the channels. Do have, a volume still on the decline on daily volume, sadly, but that could just be revving up for maybe a larger breakthrough. We'll see what happens if we can end up breaking through the 61-ish level and then getting through that 65 soft resistance level. I call it soft because it's one that we've briefly toyed with, but really 61 has been a lot stronger. All right, we do see some other momentum moving to the downside here. Cost, BlackBerry, Arcimoto, Workhorse, AMC, BTX. A lot of these momentum players rotating to the downside. I also see it looks like chargers like ChargePoint heading to the downside a little bit, probably on underwhelming charger funding in the Biden plan that was just announced. I did break down the Biden plan completely. So if you haven't seen that yet, it's worth taking a look at that video and my complete breakdown of what's inside of the Biden plan. Luminar up about 6.82%, not as high as it was this morning, did a lot better this morning. I want to see this here on Rite Aid. Let me hop on over to CNBC for a moment. Let's listen in here.
Wearing masks, we're using sanitizers.
It will be interesting to
careful.
see, which I guess is it'll be interesting to see how much people wear masks through next winter, even if the rules don't suggest it for COVID reasons, because definitely
not many.
That's been a big factor, and nice to miss out on flu, even if you have to wear a mask.
Like I think I will always wear a mask on an airplane.
I don't think about it on an airplane. I think I will on the subway.
Yeah,
but
I always get sick after airplane rides.
But outside of that, definitely keen not to have to wear one as much as possible. Let's move on to the CNBC News Update. Rahel Solomon has it for us. Rahel.
All right, let's see what we got. What, infrastructure talk first? Oh. All right, we're going to go ahead and pull back off this. This is devastating, by the way, in Florida. Used to walk by here as a kid. So I lived in South Florida. It's terrible. All right, but we are going to pull off this. We are going to go back to our sticks over here. All right, so what else do we have? We have a lot of good news. I mean, it's an overall very good and strong day. I will give, Torchlight gave back up its brief. Wow, what a swing on Torch. Torch had this like very brief momentum. Oh, sorry. Torch had this. Okay. Well, yeah, there we go. No wonder that didn't work. Torch had this very brief run this morning. And it was a very violent run to the upside, and quickly gave that up. I really think this was maybe folks rushing in again on like, oh, well, today's dividend date. Like, I want to get in, right? And we did see that pricing consolidate very quickly. We did expect that there would be some euphoric momentum going into dividend date and then also on merger date tomorrow. So you could see that again. But leading into this, we know that the expectation is once those temporary peak news catalysts go away, might see some more red again. So we'll see. Just one to be careful of. I've been cautioning against this one. I've been pretty consistent on my beliefs on this one since about $9.58, which is when I dumped it. What's this breaking news? Hold on a second.
After about 2 days of debate, the last
big tech antitrust package. Okay, we'll pull off that for a moment. So then Amazon actually down about 2% at the moment. Canoe down 1.7 here. This is probably, I wouldn't be surprised if you're seeing things like Google and Amazon down on the weight of this big tech antitrust package. These, Google's been doing well, but it's just not, it really, this whole antitrust debate makes you wonder if it's going to get stalled because Google's just been kicking butt. I mean, it's dipped in the prior dips here. It dipped in February slightly. It dipped in May along with the other tech, but it's just been on a straight course up. And really, I think YouTube ad revenue is heavily underappreciated at Google. So Google's still one of my big favorite tech plays, especially as a YouTube content creator. Now, Tattooed Chef down about 0.4. Neo pretty much flat on the day. Wow. Dropbox almost $30. That one's been a long time coming, but very, very slow. I'm not very excited about the company, but it's had its nice slow growth, and it's getting there, which is good. Everything can float up together. That's good. DocuSign sitting at 277. Coinbase 228. Lemonade softening a little bit. Had a much stronger opening. Was over 210. And 110. Now sitting at 109. Bitcoin, let's go look at that Bitcoin chart. Kind of excited to watch this Bitcoin chart. Been tracking Bitcoin for a bit here. Definitely good to see Tesla go up. Yeah, no kidding. But this is something else here. We've got the Bitcoin pricing hitting 35.3 for a moment, only to rotate back down a bit, but barely here. So this is very bullish, and I'm excited about this. Okay, let's see here. Let's see. The info is in the... Okay, cool. Oh, okay, yeah, no. All right, so then what else do we have? Let's see what our top news is so far in the day here. And let's also go to some of our trading sticks here. So I want to get our sticks up. We've got a 10-year treasury yield sitting at 1.48. And we can also get our trading views up. So 1.48 on the 10-year. This is continuing this overall sort of downtrend that we have. And on the day, we're lower than we have been, over the last few weeks. But still up from some of the bottoms after Fed Chair Jerome Powell spoke. So still up. We did hit a low of 135, which was pretty incredible, especially since folks were really extrapolating that, oh no, the 10 years going to the moon and high inflation's coming and blah, 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 blah. All right. What else? Bloomberg. So we talked about this in another video, the infrastructure plan. It's great. Actually, personally, I believe that this talk about the infrastructure plan could be one of the catalysts as to why we are seeing crypto go up. When I update my M1 pies, do the pies of your followers update? No, you have to handle it yourself. It's not, I'm not your fund manager. So unfortunately, you have to update that yourself. All right, Biden balances climate needs. Okay. Oh man, it's the old anti-memer. Grantham calls meme stocks the biggest U.S. fantasy trip. Okay. Nearly all COVID deaths now from unvaccinated folks. Okay, what else do we have? Okay, Archegos Bank's facing antitrust probe. Ooh. Try that. Okay. All right, what do we got over here? let's jump on over for a moment to CNBC. Let's get some of the latest.
Car rental prices are not going to be $400 forever, he says. But St. Louis Fed President James Bullard has a different perspective, warning, quote, inflation may surprise still further to the upside as the reopening process continues beyond the level necessary to simply make up for past misses to the low side. Quite a split there developing inside the Fed. Joining us now as part of our Curb Your Inflation series is Kyle Bass, Chief Investment Officer at Heyman Capital Management. Which side do you fall on, Kyle? Transitory inflation or longer lasting, potentially more worrisome inflation?
Yeah, Sarah, it's great to be here. I think, look, we're going to see a short term, I think, turn down in inflation because the initial inflationary burst was enormous. So this transitory comment may play out to be true for a short period of time. But I think, Sarah, when you look at the money supply, the broad money in the U.S. system, from 1980 to 2010, it vacillated between 50 and 60% of GDP. And post the global financial crisis, it moved up from roughly 60 to 68, 69% of GDP. Now we're approaching 90. So in the 1 year period, 1.5 year period since COVID started, we have introduced 34% more broad money in our system in the shortest time period in the history of the United States. So we're going to see prices stay high and move higher over time if the Fed continues to expand its balance sheet.
Oh no, an inflation person.
Why, Kyle? You could just say that there's asset price inflation and look at financial markets and where all of that easy money has landed. It doesn't necessarily mean that we're going to be paying for everyday goods at higher prices over the next few years, does it? I mean, there's a difference. Monetary inflation
good.
And financial asset inflation and then more basic commodity inflation.
Well, I guess if you don't drive or eat or rent cars or build houses, then I guess inflation won't affect you. But I think when you look at the UN
it's not what she said.
Food World Index, it's up 40% in 6 months.
It's literally not what she said. She literally said, hey, couldn't all that money printing you just said is going to cause inflation just be causing asset prices to go up? And he totally ignored her.
For talking about their ag shortage. So I think when you look across the world, you see the price of basic materials, you see the price of food, you see the price of everyday things that you and I have to buy to exist moving higher. So the answer is yes. I think asset price inflation is here to stay. And look, the U.S. is still short 8 million jobs.
Wait, you're talking about eggs and now you're saying asset. What are you saying, Kyle? What?
Than pre-COVID levels. So what we're going to see is wages are going to start to move aggressively. Every business owner that I know,
I think he's calling food an asset. Yeah.
And they're having to pay much higher wages to find workers. So I think this cycle's beginning, and I think it's going to continue.
I think this guy's clueless.
Should people be buying commodity indices or are equities the best hedge for this, Carl?
I mean, look, I personally think the best hedge is actually the hard asset. So I think if you're in the marketplace, you want to own commodities. If you're in the real world, I think you want to own productive real estate. You even want to think about buying rural land in front of major population demographic moves like we're seeing in the U.S. So I think you want to own apartments. You want to own retail. You want to own rural land. I'd rather own hard assets than equities today. Because I think we're just seeing the beginning of some of these population moves.
I mean, and this is fair. I am all for using real estate as a hedge. I don't know about buying rural land. That sounds like a crisis to me. All for buying apartments, though. Yes. Real estate, yes. That is a good thing. I didn't like his answer to Sarah. But anyway, let's go.
Are you saying avoid U.S. equities because inflation will hurt them and they're actually valued, or are they still a reasonable place to be?
No, I think when you look back through history and you look at equities performance in inflationary periods, equities keep up with inflation, call it 85, 88% of inflation, somewhere in there. Equities will do fine. I just think that when you're really looking to stay ahead of it, there are ways that, in the real estate markets, you can add a fair amount of very low cost leverage to kind of keep your real returns much higher than you can in the equity markets. And anyway, I think
this is true. This is true regarding leveraged appreciation, much easier in real estate than in stocks, safer too.
Numbers that are reported on CNBC, as we all know, those are chain weighted numbers, and the government chain weights everything. If you remove chain weighting, we at our firm believe we have inflation running plus 12 right now. So with short-term rates at 0 and real inflation running plus 12, right? It's a pretty repressive financial situation for savers.
Oh yeah.
But I'll just keep arguing on the topic in the spirit of our new Curb Your Inflation series. Kyle, if you believe that it was going to last, then why are we seeing the 10-year yield at 148? Why have we seen the tips markets continue to price in lower expectations of inflation in recent weeks, and the commodity prices start to roll over 50%?
Dude, she's crushing them.
It's not the ultimate inflation gauge, but you mentioned housing.
Yeah, I mean, on lumber specifically, you probably know that the lumber mills, a lot of the lumber mills closed during the COVID pandemic. So you have a supply and demand mismatch. If you look at the price of timber moved 20 or 30%, while the price of lumber moved 600%. So lumber will come back into some sort of normal range. But in the long run, look at wages. Look at the average price of a car. Look at the price of food. Are any of those prices in your life? Have you seen them going down in the last few years? I haven't.
This is a populist argument. Hey, used cars are going up, right? Food's going up, right? Wages are going up, right? That therefore inflation's here to stay. Populist argument, very, very bad logical fallacy to just appeal to the populace. Like, oh, well, I mean, food's going up, isn't it? It's going to keep going up. It doesn't freaking work that way. You look at it, you look at the numbers, you go, yeah, used prices are going up for cars. They gone up. Are they going to go up again next year? Are they going to go up again the year after that? You need persistent inflation to have real inflation.
Kicking off a cannot miss hour of Closing Bell.
Oh, man, I wanted more of this. This guy's nuts. And this talk about wages. Well, how about when the unemployment boost wears away? How about when schools reopen? How about when we actually start getting the correct people for the correct jobs lined up and we don't end up having that mismatch anymore? I completely agree with Sarah here. So I think Sarah crushed it, and I think he ignored a lot of her points, which is very unfortunate. Oh, well. Inflation debate shall continue. Oh, I love it. All right, so what else do we have? I love the inflation debate. I'm very passionate about it. So I am very, very much a believer that this inflation stuff is here, but it's short term and it's not persistent. That's the key thing, is year over year. And I think it's just worth noting very briefly before we look at the sticks again. Remember, folks, remember this. When inflation goes up, okay, when you have the price of something, and watch this, all right? When the price of something goes from $100 to $110, that's pretty big, right? We see that as, oh my gosh, 10% inflation. Well, what happens the next year? In order for it to go up 10% again, it would have to go to $121. That means the supply chain issues got no better. That means inflation continued at a very high rate. Well, nobody's actually expecting that. What we're expecting is maybe whatever you're buying for $110, maybe it goes to $112. And so what happens? Boom. Now you have 2% inflation. This here is the inflection point that you have to be careful of. And this is what folks are very much confusing, especially this dude, Kyle, who was just on CNBC. Yes, this is inflation. Yes, this number here is still higher than this number. I get it. My friend. I get it. But here's the problem. It doesn't mean you're going to get that inflation again next year. Or how about the year after, when whatever it is you're trying to buy for $100 is now $114 or $116, right? That is very, very different from that COVID inflation, temporary madness you had. It's very, very hard to have this inflation year after year after year after year. Very, very, very difficult. And that's why I strongly believe this whole inflation discussion is a joke. And that's also why I think treasury yields are falling. Because people are like, yeah, this isn't really going to last. So whatever. And I'm not mad at anybody for taking a different side. I don't care. I'm putting my money where my mouth is. That's all I have to say. All right. So what else do we have here? Trade desk. Still kicking butt. All right. You know, this guy in the comments here who's actually paying, saying, I don't know what you're saying here. You're saying, you're so wrong, Kevin. Give me a real argument, dude. You're saying 10% permanent Juno was caused by the Fed? What? This makes no sense. Maybe give me a real argument and we could talk about it, because I'll gladly talk about it. And I don't disagree with you. Inflation does screw the little guy. I'm not saying that the inflation we have seen is good. I'm not saying that. I'm saying over the next 4 to 5 years, it's not going to be this 10% crap that people are so worried about right now. So, you take your tinfoil hat and go somewhere else, or give me a real argument. If you want to give me a real argument, I'll have a debate. But this nonsense or name calling, so it's just not going to work here. All right. So why would banks be hoarding cash if inflation wasn't here to stay? Okay, look, see, this is a real question, right? This is a real question. So why are banks hoarding cash? Well, it's because when the SLR requirements expired, banks were able to get rid of more treasury bonds. When you get rid of treasury bonds, you get more cash. Why would banks get rid of treasury bonds? Because yields are falling, because banks also expect inflation to fall. So they get rid of treasury bonds. And we're also seeing these yields go down, right? The yields of treasury bonds are going down. This is still offset, of course, by the Fed buying them up. That's partially why you're still seeing yields go up. But banks are reducing their treasury holdings. And I know that gets confusing because they're not the whole market, right? But banks are reducing their treasury holdings, creating more cash. What happens when banks have more cash? They try to lend it out, but they can't lend it out as fast because there's not as much demand. This is like the anecdotal reference of JP Morgan calling me up regularly going, hey, you want to increase your credit line? They're having trouble lending out the money as fast as all the money they have. Part of the reason banks also have so much more money is because the Treasury Department is sending more and more stimulus money out into the economy. Look at here. We'll look it up. Treasury General Fund drawdowns. Okay, here, I'll show you. Treasury Department General Fund drawdown. We'll pull up the account. So let's see if we can find it. We got to find the general fund. General fund. Basically, it's a line straight down right now in terms of how much money is at the Treasury Department. I cannot find it right now. Here we go. No. Anyway, the amount of money the Treasury Department has is plummeting because they're pushing more money into the economy via the stimulus programs that were already passed. So, of course, banks get more deposits. So now you have a situation where banks are holding less bonds, having more cash. They have more cash from Treasury deposits coming in. Now, all of a sudden, banks have more cash. They can't lend it out fast enough. What happens to reverse repos? Reverse repos go through the roof. So, in other words, it makes sense why banks have so much cash right now because we just printed a crap load of it. That doesn't mean we believe that persistent inflation is here to stay. Yes, there have been short-term issues. Totally agree with that. But look at the Treasury General Funds. Maybe I shouldn't write drawdown. Maybe if I could get the Treasury Department General Fund falling. I know how to find it. Here we go. Treasury Fund. Yep, found it. Here we go. Give me one sec. Here you go. Here's an example of the Treasury's fund right now. Check this out. This is where your cash is coming from, folks. The money is literally going from the Treasury Department, which had the Treasury Department at the start of this year had about $1.7 trillion in its bank account. And it's down to $812 billion right now. So it's pumped almost $1 trillion into the economy. Of course, cash at banks are going up. It makes sense. It totally makes sense. So when you look at the actual data, this cash at banks thing is actually not an indicator. So yes, I do expect to see deflation in lumber, for example, and this kind of goes back to our discussion here. Think about this. Lumber prices go up like this. What if now lumber next year, instead of selling for 110, sells for 105, right? Now, this is actually 5% more, or this would be, let's say, 2 years from now, right? Or let's say this is 2020. Call this 21. Call this 22, right? So from 2020 to 2022, you got 5% increase in prices. But because you went up 10% in 2021 as an example, and then you go to 105 the next year, guess what you actually had? You actually had almost, and this is approximate because I know it's not perfect, but you almost had about a negative 5% inflation rate, which is like deflation, right? So it's really, really fun. I love the debate. So this is what you got to be careful of. And so that's why it's really important that you watch for that inflection point right here. Very, very, very important. So we're going to go back to the candlesticks in just a second here. So we talked about this, workhorse, wish. We'll take a look at that. Okay, we got it. It's also possible. Okay, we talked about that one. Okay, good. So now let's go to stocks. All right, what do we got here? Rite Aid's still getting smoked. We got GameStop. Momentum is just losing it today. Not much, but you do have momentum rotating down. BlackBerry, GameStop. This is, oh yeah, it would help if I did this. BlackBerry, GameStop rotating to the downside. Well, it's a bummer to see that with momentum, but sometimes momentum's got to, as I like to say, reload the shotgun. Now, one of the little problems that we have is you do have short interest data going down. For example, we see this at Ortex. We saw this at on the Bloomberg Black app this morning. We do have a reduction in short interest. Hold on a second. Did Ortex just update back up again? It's possible. This is actually an upward reading here, because this morning we saw the reading fall into about the 12% range on AMC for short interest for through the Black app. So this could potentially even be a little bit of a revision back upwards. But we're noticing that the short interest data is not skyrocketing, and we're seeing share utilization still a little soft. Now, where we are seeing short interest data still tick up is something like Workhorse, which Workhorse Group. We are almost completely utilized in terms of shares. We're at 97.81% utilized for shorting this company. We're sitting at Ortex is estimating 62% short versus a previous estimate of 52%. The Black app from S3 Partners still shows Workhorse at about 46% short. But I think Workhorse is one of the big ones that's priming for a potential short squeeze. I personally would not be opposed to grabbing some Workhorse. I'd prefer to get it at 14, because I think we have a really strong support at 14. Not bad to have some exposure right now. Let's zoom out a little bit here if we've created any new support lines. See, here's our 14. Let's go, and then we might even hit Trading View. Actually, we probably will. Give me a second here. So here we go. This is, oh, that's funny. Look at this lid that we bounced off right here on Workhorse yesterday. It looks like we've this one's pretty soft, but it's worth seeing as a slight resistance level. So I'm going to mark this. Remember, I do teach the way I do technical analysis, which everybody does TA differently. I do teach my way, and we have more lectures coming this weekend in the Stocks and Psychology of Money group, which there's 6 days left to use that coupon code. 40% off, and then pricing goes up over time. So even though there might be different coupons, the pricing does net go up over time. Inflation, after all. So yeah, we've got virtually these two touches here, a slight miss here. This is an increasing top, which is good, but now consolidating a little bit here. Yeah, you can almost put a very, very soft set here, because then we actually have a triple touch. I'm going to make this a soft draw as well. And I'm going to go with red on this one. It's even softer, I think. It's more recent here. So we got a touch. We got one touch here, 2 touch here, 3 touch here. I'm going to watch Workhorse very closely. I do think we're on a bit of a trend down. We have volume somewhat stable. Let's go ahead and jump on over to Trading View. So actually, there's our Trading View. Let's go to Trading View on Workhorse. We got 7 minutes left to the bell. We do have Beyond Meat kind of flat today. I really wanted to short Beyond Meat today, but I'm also so anti shorting. Okay. Big business caused the short-term inflation. Prices will correct once we open and competition starts again. Agreed. At least with your second part. Okay. So look at this. Look at this bounce. Well, here, this is a volume line. Okay, hold on a sec. This is interesting. That 1535. No, we're not in a band. We're not, particularly oversold or undersold right now. Let me look at moving averages here. I'm just trying to figure out what is creating a potential support here. I want to see volume, bigger volume coming in at 1559. I've previously drawn a 1535 volume line. That's the drawing that I've done. I'm going to kill that for a moment. And let's see here. These moving averages aren't helping me. Let me go see if I can grab the EMA 12. No, it's not making a difference right now. Okay, so I'm gonna take a little bit more time on watching Workhorse consolidating right now. Let's go out to the day chart and see where the volume is. I would say most of it's probably in the 14 range. If I go back to the hour candlesticks, and let's see where most of our volume is when we turn on our volume indicators here. Oh, wow, I'm wrong. Yeah, it's much closer to that 1435 level, which is what I had marked. Should have listened to what I had marked. Yeah, that's the big volume level, which 1435, 1535, that's almost where we are now at 1558. I will watch this. Okay. Ugh. All right. So watching Workhorse very closely. I do think it is very much a potential squeeze candidate. Is trading down right now. Torchlight, I personally recommend staying away from. We've got, hey, Playboy back up. Playboy's one of those SPACs just been killing it. Let's see. We're going to cover FDX earning today. What's, I don't even know what FDX is. Oh, FedEx. It's not even something that I've considered investing in throughout this entire pandemic, which honestly, they've done well. They've done very, very well. I mean, look at the run that we had from last summer, right? It's been a great company. It's just not, it's not one that I personally ever got excited about investing in. I'd rather invest in Amazon than I would in FedEx or in UPS. But I will, let me see here. Earnings. Give me one sec. I want to see what's up for earnings coming up here. Let's see. Okay, here we go. So today, yeah, we do have FedEx with BlackBerry, Nike. I'm happy to cover these. I mean, I'll cover these, especially Nike. Yeah, Nike, BlackBerry, FedEx. Sure, we'll cover those. I'll make a little note. FedEx, BB, NKE earnings coming up. If you're not getting notifications for the video, like you mentioned here, I highly recommend. Oh, why is it not showing? Okay, let me write it again. FedEx, BB. Oh, there we go. Now it's coming up. If you're not getting notifications, make sure to download the Meet Kevin app on your phone. Android and Apple, it's totally free. Download the Meet Kevin app on your phone. You will get, if you want them, of course. That's why you would download it. Like you would download the app if you want the notifications, right? Turn on notifications, download the app. You will never miss a YouTube notification again. So that way, if I do a video that's like, hey, look at FRX run today. If I do a video that's like, hey, I'm buying this crypto or whatever right now, at least you see it. Crypto or FRX kicking butt today. I think that's because we had our merger meeting here, FRX, which is super exciting for Beachbody here. 1 hour again, approved proposed merger with Beachbody. Yep, nice movement here. Very, very, very nice. Won't rural properties become valuable in case Dems run states keep pushing the middle class away? Buying as much rural land as possible. Well, Bill Gates buying as much rural land. Yeah, I think that rural land has the potential of appreciating, but if I'm going to invest in real estate, I'd rather have the tax benefits that go with it and the ability to get a wedge deal, which I could do by buying buildings. So don't get me wrong. I love real estate. I'm just very anti-land. Land peeves me. All right, 2 minutes to closing bell. Momentum stocks still rotating down a little bit. I did close my SoFi options a couple days ago. I did close my DraftKings option a couple days ago. Took my profits on my trades. We've got, of course, every time I make a buy or sell, I send an alert in the Stocks and Psychology and Money group. That coupon is down below. You join one time, you get lifetime access. We got End Phase sitting only up about 0.4 right now. End Phase a little soft. We've got them at 170, kind of soft on the day here. I'm surprised Big Digital is not up more. Very surprised here. I think Big Digital should be up more on a day like today. It's been on a large downtrend. I've been trying to get this into the and when I say downtrend, I mean recently, because it's also skyrocketed. But it's been on a relative downtrend here since about peak crypto. So it's been trading down with peak crypto. Right now, it's breaking our trend over here. I personally like this enough to, I mean, we're 113 is sort of a support line here. Yeah, I'm a little disappointed at Big Dig. This is another one that I'm going to be watching really closely. So Big Digital, HUD8 took off today, did really well today. We got about 30 seconds to go since until the closing bell. So let's get ready for the closing bell, and we'll see how things close going into closing here. So let's get the bell.
The utilities and real estate sectors, respectively. Oil's up a little bit today. Gold down a little bit.
I can barely hear, so I'm just going to say here, Dow Jones up almost a full 1% at 0.94. S&P 500 up about 0.59, NASDAQ 0.69, and we have the Russell 2K up 1.31%. One of these days, out of so many closing bells, they'll realize we can't hear them during the close.
30th record close for the S&P 500 of 2021. Welcome back to Closing Bell. I'm Sarah Eisen here with Wilfred Frost and Mike Santoli, CNBC senior markets commentator. Take a look at how we finish up the day on Wall Street. The Dow up 322 points on the session. Pretty strong all day, and then got a bump early afternoon. You can see it on the intraday chart when we learned of a bipartisan deal that President Biden did announce between Democrats and Republicans for infrastructure spending, coming in at a little less than $600 billion and initially not planning to raise taxes. That was key. It helped lift industrials in particular. Lift industrials, I should say. S&P 500 up 0.6%, record close. After it also hit an intraday record high, 42.71 earlier in the session. S&P very strong. Most sectors did finish higher. Financials were actually the best performers. We saw firmer yields, sort of a steepening of the Treasury curve, helping the banks ahead of the stress test results coming this hour. Energy, industrials, communications services, also very strong. Utilities and real estate closing lower. The NASDAQ closing at a record high. Tesla having another very strong day. Most point impact over there, actually up more than 9% so far for the week. Microsoft, PayPal, Facebook, Nvidia, Alphabet, all contributing to that rally. Amazon and Apple, though, closing lower. The Russell 2000 index of small caps up 1.3%.
All right, Sarah. Thank you very much, Sarah, for this. We are hopping over now to FedEx, BlackBerry, and earnings on deck for Nike. So Nike, FedEx, BlackBerry. I will have these earnings on deck. Let's see here if I can also get the estimates for them. But I want to see how things have closed. So we've got FedEx, BlackBerry, Nike ready to go. Now we're going to take a peek here at the sticks. Bitcoin is still doing well, heading back to 35,000 pretty quickly here. Trade Desk moving nicely, 16% on the day. Agora API, the backbone for Clubhouse, up about 9.4%. Clubhouse really hitting its peak when Elon Musk was on the platform, and API has been down since then. You can almost to the day since then it's been falling. Tesla actually giving up some steam here into the close. Tesla giving up, only rising about 3.54% today after being up as much as 5.5%, potentially out of some disappointment at the electric vehicle money in the current infrastructure plan. Not as large as expected, much smaller actually, with only about $15 billion going to the EV sector, only about 7.5 of that going to chargers compared to the $100 million that were initially suggested. You've got ChargePoint sitting up 1.49% in the afters, but down 4% on the day with that news. AMC soft into the close here. We've got GameStop down 3.16%, up a third in after hours here, but down. Both down on the day here. A lot of momentum moving down. You've got Workhorse down 2.64, dropping another 0.5% in the after hours. You have Arcimoto right now down 1.44%, relatively flat in the after hours. Simon Property Group down 1.2%. Matterport down 1.25%. You've even got Shift down about 0.9% here. Both companies I expect to do very well over the next year. We've got Apple relatively channeled as usual, sitting within its range here. Look at it, waiting for this potential breakout of 135. The antitrust news is certainly not helping Apple break through the resistance line that we have drawn here at just over 135. Walgreens actually surprisingly ending flat today after a disaster for Rite Aid, down 14.5%. Let me take a quick peek to see if we have earnings coming through yet. Let's see what we have here. Oh, yep, FedEx just came through. We have FedEx coming through at an EPS of 6.88. Adjusted EPS coming in at $5.01. That is 1 penny more than expected on FedEx. 1 penny beat on FedEx. Revenue coming in at $22.6 billion versus an estimate of $21.49. That is a very, very slight beat. It's about $1 billion beat on revenue, but only 1 penny more going to the bottom line. Margin coming in actually slightly lower than expected. Margin coming in at 8.7% versus the estimate of 8.86%. That's probably not going to do great things for the stock in after hours. Margin declines, usually not what you want to see, unless, of course, they say that it ends up being something temporary. Forecast for 22. That's wait, hold on. Oh, no. Okay. Sorry, I read this backwards. This is actually better. The median estimate for the 2020 forecast was 20.48 billion. I'm sorry. The median forecast for adjusted EPS was $20.48. And they're giving a range of 20.5 to 21.5. That's a beat. That's good. So it's a beat on forecast, tiny beat on EPS, coming in 1 penny more. It's a small beat on revenue, and a depressing, well, not really depressing, but a miss on margin for FedEx. Then we have still waiting on Nike and BlackBerry coming up. So we'll wait for more details on this. We'll go ahead and jump back on over to our sticks here. Let's go see how FDX is doing after that. That margin miss, not going to be very good. Not a surprise. We'll see what they end up saying regarding that margin miss. Potentially something to consider for, I wouldn't mind reading the transcript afterwards to see what inflation impacts they're projecting. Very, very important to watch for those inflationary impacts. Look at that Build-A-Bear going to 19 here in the after hours. Wish, look at that gain on Wish here. Wish going up 5.7% intraday, and then another 2% here in the after hours. Nice run on Wish, really out of nowhere here. So we have Nike rising right now in the after hours. Slight red candlestick here. Let's see if we ended up getting those earnings on Nike. All right, and Microsoft, wow, above a $2 trillion market cap. Absolutely incredible. Still no earnings on Nike or BlackBerry. It looks like we are waiting for, we got FedEx. BlackBerry might not come out until later today. The current estimate is 5:15 p.m., which is about an hour from now. So we might have to wait on BlackBerry, but Nike will be able to capture within this video here. So we'll see what happens with Nike. Okay, then we have, going back to the sticks. They're talking about Microsoft. Okay, yeah, so we'll go back to the sticks here. C3 AI rotating up slightly here into the close after some volatility here. So you do have a little bit of a down on the 1 minute chart here. Let's see, what do we have here? If anything, maybe towards the downside here, and then a slight increase towards the end. But at 61.88, that is C3 AI for us. We have, let's see here, Bitcoin, I think just crossed 35. Nope, not quite yet. Bitcoin still sitting at 34,897 on Webull. However, Coinbase reporting that Bitcoin hit a high in the last 24 hours of 35,199. Waiting on those Nike earnings now. Let's take a look at the rest that we have here. Okay. We have movements in the after hours. Really, it's just Wish and Build-A-Bear, Sundial. You have Hut moving a little bit in the after hours. Torch trying to recover or get a little bit back in the after hours. This is probably going to be the FedEx earnings alert, which we already covered. Let's hear it.
2 cents above the estimate of $4.99.
Dude, we literally got that like 5 minutes ago. Let's see here. Do you have app channel for comments? I'm not sure. Tag me in Discord. Not sure if we have that. All right, what else do we have here? We have okay. All right, here we go. So, yeah, FedEx trading lower, not a surprise. Let's go back to the candlesticks. Here we go. Waiting for Nike as well. Yeah, FedEx continuing to fall here. We saw that when FedEx was really a bit higher here. We got that news pretty fast. Waiting for Nike really, though, right now. Give me 1 second. Let me pull up Nike. Nike still not here. We are expecting to see Nike, though, within the next 5 minutes. All right. Let's see what else we have here. Then, oh, here we go. Bitcoin's pushing again. Very good. Doge over 25 again. Oh, look at it bounce off the line. Oh, look at that. We have the line drawn at 25.83, and it just bounced off 25.87. This is why you got to be part of that Stocks and Psychology of Money group. Then we have Ethereum sitting at 2K. Gosh, half of what it was when it was 4K not too long ago. It's incredible. We have ADA. Let's go to ADA here. I'm tempted to add a little bit, but we'll see what happens here. We've got ADA sitting at 138. We just grabbed it at 104 to 107, which is great. We timed the dip. And now we're watching the movements here on ADA, but nice movements to the upside on ADA. We are still waiting for Nike. I'm excited to see Nike come through. I'm not really expecting Nike for about another 4 minutes. FedEx we talked about. Talked about inflation a lot in this one too. So if anybody wants to talk inflation, scroll back and watch the video. We got lots to talk about inflation in this one. EXPI almost over 40 again. Walgreens boot. Positive on the day was a shocker after the Rite Aid move. So good for them. We are Ashford Hospitality 11.8%. Voyager Digital did well. It doesn't surprise me that the crypto companies are doing well right now. Riot Blockchain, Marathon, these were the ones getting smoked. Peloton still went up 3.7% today. Tesla still went up 3.54%. Again, not those highs of the day. So we'll see if we end up getting a moderation in prices for tomorrow being Friday. It's possible you could see a pullback in some of the runners today. And that, who knows, that might create another either buying opportunity, or you might just want to wait to see if we get another consolidation to the downside on some tech. It's been rough getting out of that that rut that tech stocks have sort of been caught in since February. So Apple CEO Tim Cook poses for a photo as he walks around the new Apple store on Broadway in downtown Los Angeles. Good for him. All right, let's see if we got Nike yet. What we got? Nope. Still no Nike. Still waiting for Nike. Let's listen in a little bit.
Stephanie and Gina, thank you both very much for joining us. Great to see you both as always. Nike has been the worst performer in the Dow this year. Up next, we'll break down the company's latest earnings and what the results say about the state of the consumer. Plus, Carnival CEO Arnold Donald on the cruise line's big jump in booking volumes and the timeline for resuming trips in the US. And we are just minutes away from the latest Fed bank stress test results. We'll get reaction from former FDIC Chair Sheila Bair later on Closing Bell. We're back in 90 seconds.
All right. Well, I do want to see when the stress test results are coming out. Maybe we can get a jump on those. So we got to see here. Today. This is for Friday. I'm going to look at the full calendar here. They say minutes away. So minutes away for CNBC can sometimes be hours away. Tricksters. Okay, here we go. Fed? No. Don't know. I have no idea. Does anybody know what time the bank, the stress test results are coming out? That'd be nice. In 15 minutes at 4:30? Oh, okay. Thank you for that. All right. Well, appreciate it. So very curious to see what happens there. All right. We are waiting now still for Nike within a minute here. Okay. Let's go back to sticks. Just see how things are moving. Let's see how Nike's moving as we wait for Nike to report. Still moving up. Optimistic here. Optimistic on Nike. Nice. All right. We're about 1 minute away now from Nike. We can go watch crypto for a moment. Let's see how crypto's moving. Bullish here. This is good. It's good. I mean, we didn't get a lot of liquidity issues, which is great. I mean, this was a pretty sharp decline here. And how far are we up from that bottom here? 28.8 divided by, well, the current number is 34.9. So 34.9. That's what, a 15%? 21%. Very nice. Very nice movement here on crypto. Just timing, of course, from the bottom there. If you were able to buy right at the bottom. I think I bought somewhere right around here. ADA pushed a little more, which is also nice. Waiting now for Nike in the next 10 seconds here. All right, so we'll see what comes through. I'm excited to see Nike. It's a big one for consumers. Ooh, what's it gonna be? Is it gonna be? Oh, here it is. Oh my gosh, it's so long. How do they put so freaking much on there? I can't read all that much. Okay, here we go. Net 1.5 billion, EPS 93 cents. Inventories come in at 6.9 billion versus 7.58 estimate. We've got looking. Gross margin came in better at 45.8% versus an estimate of 43.8%. So that is a beat on margin. Revenue, wow. Revenue came in at 12.34 versus 11.03 estimated. That's really good. Chinese revenue actually came in lower. Greater China revenue coming in at 1.93 versus 2.25 expected. So that's up on revenue in total. That's down in China, up on margin. Up on revenue, up on margin. That's very good. Growth led by higher wholesale shipments. That's good because you could ship. Oh yeah, look at Nike there. You could ship more Nike, like more products to people who custom print shirts or whatever. So very good. We've got EPS coming in at 93 cents versus 50 cents expected. Oh my gosh, it's a really good beat.
Greater China revenues up 17%, and that is also a positive surprise. There were some analysts that thought that
up 17%, but still missing estimates on China here. But yeah, revenue up 17% for Greater China. But Europe, Middle East, Africa revenue up 124%. Oh my gosh. Yeah, Nike jumps up to 3.6%. Amazing. Really, really good.
Digits shows that Nike continues to be a strong brand in China. Let's see if I can get any other. North American revenue up 141%. So we knew it would return to growth because of the supply chain issues. It also returned. You're seeing these huge comps.
It's up 4% in afters now
at this time, but this was even better than analysts were expected, and perhaps you could say a better setup because the stock was down so far this year. The profitability comes from sharply higher margins and the
gross margin,
digital. And the fact that Nike has been so aggressive and out front, gross margin increasing at 850 basis points to 45.8%. In other words, they've focused so early and so big on digital and the sneakers app. It's just becoming such a profit machine for this company.
Jeez.
And you're seeing that directly flow into the bottom line.
Mike's going to say peak athleisure.
No.
Awesome for Nike. That's really, really great.
No, I mean, the brand momentum is strong in most parts of the world. Europe, of course, was closed last quarter, so that was a weak spot. It's growing this time because they've been able to open it. And we look forward to any commentary on guidance on the call. We don't get that in the release. And on what they've got planned for the Olympics and just the return to sport and how they're capitalizing on that after it had been shut down for so long.
They point out inventories down 7%. So obviously that gets cleaned up because it was probably too high last year. So pretty much everything, looks to be in place here in terms of the
awesome. Very, very, very good on Nike. Super, super awesome. Okay, so crypto balancing, sort of sitting at this 35 line. We'll see if it ends up breaking above this. If it breaks above 35, I think 40 becomes in sight pretty soon again for Bitcoin, which is great. We'll see what happens. It's been quite the downtrend since about April. Really have to go out to the day chart to see it. Here you go. So, well, not last year because that's where pricing is pretty dang low. There we go. So this is the trend we have right here. Still a concern about that potential that some had been calling for, that head and shoulders pattern, which was the line here. We saw a dip. We have not seen that continuation. Still, obviously, we're sitting within the death cross. But right now, a lot of enthusiasm coming back to cryptocurrency, especially after the negativity around China. Which, by the way, negativity around China, really good for Hut 8 mining. Great for them. Okay, folks, thank you so much for being here. Appreciate it. Good job, Nike. 4.5%. It's amazing. Go check out the courses linked down below. Use that coupon code expiring now in 6 days. And, folks, we will see you next time. Thanks so much.